Today's market call is presented by CME Group, where risk meets opportunity. And FactSet, financial data and analytics powered by tomorrow. Down any loose furniture, people, because we got a humdinger here on the market call. It's 11 a.m. It's 11 a.m. on the East Coast. Danny Moses, as you can see and or hear, or both, is all kinds of fired up, and he's joining us. It's like old timers day here at Risk Reversal Media. Dan Nathan wearing his vest because clearly he's going figure skating later at some point this afternoon.
What's that mean?
Hello, boys. You guys are together. I'm in parts unknown.
Only Dan's.
Only Dan's. Come to New York. It'll be great. We'll have a few laughs. This pretty nice weather you guys are having here. This was good timing on my part.
Danny up from Boca Raton, Florida here. Listen, we just said there's weird stuff going on in the market. We got to get our weirdest market participant that we know and friend. By the way, it's Danny Moses, who is the host of the On the Tape podcast. He also hosts the What Are We Doing Substack with Vinny and Porter and the Friday Night Dirty. If you subscribe to his Substack, go to
and get your calendars.
Where are you going to?
What are we doing on the desk?
It's an amazing, honestly, it's an amazing offer.
We still have that promo. Do we have the promo?
Yes,
no, we're not running the promo.
Yes. So the Danny Moses show that's on Scripps News every Friday night, and you can find it on YouTube. The Danny Moses show. We previewed it. You had Vinny and Porter on last week. Who's your guest this week?
Cameron Dawson.
Oh, we love Cameron.
Yep.
Okay, so New Edge. All right, so Guy, you and I were like, there's some weird macro stuff going on. The dollar, right? Gold and silver. Bitcoin can get out of its own way. It feels like on a day that with a Fed meeting starts, right, and we get the rate decision tomorrow with the presser, some macro stuff going on. And by the way, we're headed into the biggest week of corporate earnings. A lot of stuff going on, Danny.
I know Danny has thoughts on this. So let me opine quickly and say this weakness in the dollar should not be overlooked. And you want to talk about pound sterling to the dollar? Well, we're levels we probably saw, I think, in the spring of 2021. You want to talk about dollar yen? We'll save that for a second. You want to talk about the euro versus the dollar? It's a much different thing. Here at 119, something that I've been watching for a while. That's at levels we haven't seen in quite some time. So dollar yen, though, Danny, is the one that concerns me. And this move from basically, 159 and change to 153 and 20-ish in the course of a couple trading days, I don't think should be overlooked. Thoughts?
Yeah, well, it appears that the U.S. is the one intervening in the Japanese markets, not Japan itself. And so the rumors are that there was a, quote, rate check on Friday by the New York Fed to basically send the signal, we're going to come in and support your yen. Now, they would do that for two reasons. I don't believe it's to have a weak dollar so that, we can import, we can sell stuff there and the yen would be stronger. I think it's because they don't want them to sell our U.S. treasuries to go and support it. So we'll just do it out of a different fund, out of a stabilization fund. So $10, $20 billion. So that's been the rumor. So whether it's just talk to get the yen higher, I don't know, but that's going to be an ongoing issue. And as it relates to just in general, the macro, and Dan, your point, I think of stand and deliver, Edward James Olmos, a negative times a negative equals a positive, say it, a negative time. So this is calculus. So what I think is that all that matters here is earnings. So if you want to just get rid, there's so many things going on. Let's just do bottom up stuff, and the earnings are okay. The earnings are fine. And that's where I think this market sits right now, because if you start to incorporate all the macro noise and stuff going on, you'll get in your own way.
Yeah.
And I'm not saying that's good or bad. I'm just saying it's just so much happening. It's
Well, we've been talking about this, and I just want to hit an article in Axios, and I've had a lot of folks that are not in markets asking me about gold, right? Fewer are asking me about, U.S. treasuries and the dollar. I don't think that's the purview, because gold, it's all right. Here's this story. And I think there's a couple things I just want to kind of throw out here. So this is a guy from RSM. I don't know what the hell that is, but his name is Joe Brasalius. He's saying investment dollars flowing into gold are largely a function of the risk associated with the unpredictable policy in the U.S. Here's another guy saying gold is acting like insurance against policy fragmentation. All right, so a similar theme. That's a guy from Twin Focus here. You guys have been talking about demand from central banks, I want to say, for years, right? And it's all coming. And Guy, you've been saying this, it's going to be a thing. It's going to be the thing. What is the thing right now? Is it the policy uncertainty? Is it what we saw in Davos, right? This kind of break from this traditional order that we've had? Is it like what we're seeing, like you guys just talked about with Japan, right? And really, us having to intervene in place of them because we're worried about what they might do, right? And how it's going to affect our treasury market, our interest rate market. It just seems like this is not something that we've discussed in this kind of framework in a long time, Guy.
The answer to that is yes, by the way, and I'm not trying to be clever, but all of the above is the answer that I used to give when I didn't know the answer, but I think it's true here. But, that article, if you want to go back to it real quick, I think this is part of it. This is not the entirety of it. But what I have said, I said on Fast Money, I've said here, the historical norms, at least historical going back to World War II or post-World War II, are sort of thrown out the window. And countries, I think, that felt they could rely upon other countries, I don't think that's necessarily the case. So what you will continue to see is central banks buying gold for a lot of different reasons, but almost as importantly, repatriating their gold and getting those gold bars back within their borders, which is something that Danny and I have talked about extensively, I think. And that to me is a real story. So it's like everybody's going to their respective corners right now, and that's very bullish for gold. And if you say that that's on the back of this de-dollarization or on the back of the policies that this administration is trying to put in place, that's fine. But this has been going on for quite some time, Dan.
I think the best way to, instead of going short the S&P, and Vinny and Porter talk about this all the time, it's to have been long gold. The dollar is down. Obviously, you can bring that chart back up if you want. Historically, that's always been an inverse correlation to gold, right? But what's really interesting is a couple of times in the last few months where the dollar has tried to move higher and gold was still moving higher. So there's a bigger trend here that's obviously going on. And when you look in dollar terms, what your S&P returns are and so forth like that, you really should, I'm not saying you have to adjust for it. So gold is slowly basically replacing the dollar as a world's reserve currency. Gold is now a $35 trillion asset, okay?
Mm-hmm.
And dollars in circulation, I don't know the whole amount, whatever it's going to be, but you think about where that's come from. We've gone from, 10 to 35 trillion. That's a real thing. So it's a hard currency. It has separated itself from Bitcoin. And, I understand the argument to be long Bitcoin. I'm not going to rip that apart at all. But at the same time, it hasn't been proven in a cycle like this. So this is a long time coming. That article just summed up what we already kind of know is the debasement trade or confidence in the United States and all that stuff. So, so the answer is buy gold. But here's the thing, Dan, this is interesting. It always had been used as kind of an inflation hedge, and it was a trade, right? But to Guy's point, the physical demand for gold itself has never been like this on a sustainable basis. And so you're taking gold off the market. Silver is a whole different situation, up for different reasons, but also has to do with the physical demand. I'm going to say one other thing I think is important here. So the paper trade for gold and silver, whether it's GLD or whatever it might be, to me is not the way to trade. It's a way to track it. It's not the way to trade it.
Mm-hmm.
I believe we could hit a point where those trades, and Guy, I'd love to get your opinion on this, could lock up. You could see a halt of trading potentially of some of these paper ETFs that say the underlying, we're so far behind in getting I'm not making that call. I'm just saying I'd rather own the physical, either the closed-end funds and or the physical itself in general. And I think that's the way. So if I'm buying gold or silver or metals today as a hedge, I'd rather own the physical in some form.
Guy,
the cold is clearly frozen your brain, Danny. Sorry, Dan, because you and I have had this conversation a few years ago. We have said the construction of these ETFs, the GLD, and some of these paper-backed ETFs, there will be a scenario where they don't work. And the constructors of whoever holds these things could basically create some sort of force majeure type of thing and saying, listen, we're taking our ball and going home. And that's in this scenario that I think is taking place. And I think you would agree with, the last place I think you want to be is in GLD. And I think you absolutely want to be in the physical back, the PHYS, for example, or these mining stocks that we've talked about at length. Agnico Eagle Mines is probably the best one, but there are other ones too.
All right. So answer this to me, people.
Riddle me this.
You just talked about owning the physical. It's expensive to hold and, all that sort of stuff. Well, it is.
We call it the cost of carry, by the way.
Thank you, Guy. Okay. So I just went to the Chat GPT.
Of course you did.
And I asked the question, over the last 40 years, which had a better inflation adjusted return, gold or the S&P 500 from 1984 to 2024? Now, that's not obviously including this move that we've had, but on average, the S&P has rallied 8.5% of the year versus 1.5% for gold. Okay. So my point is, until recently, and the outperformance that you've had, it's not been a good trade.
What is that? Like saying, oh, the S&P in 2009. No, I'm just, but gold has been the best performing asset in the market, period, over the last, 40 years or something like that. So it's been pretty good.
What are you talking about?
All
Go
right,
to the
whatever.
chat. Well, my point is like I just worry. I just worry that there's so much retail money, okay, chasing it for on top of all the reasons that you guys just mentioned. Okay, like that's the one thing. And Guy, you say every once in a while, I don't want this to sound glib. I'm like the opposite way. I love saying things that sound glib on purpose because that's just me being a dick. But you and I were doing,
yeah.
You and I did the market call together. Was it last week?
Yeah.
And silver was at 87.
You're like, anyone that buys silver here, you said should be either incarcerated, neutered.
I think I said neutered or something like that. Whatever. Okay. Now it did go to 114. Now it's trading at 98. Danny and I just put a bet on, Guy, that gold or silver at 98 goes to 88. Me going to 88 before it goes to 108. We bet $100.
$1. So that leads to a question. This is from Merkel or Arkle or somebody.
Merkel?
7374.
Can I do that?
July 3rd, 1974. That's the way I interpret this. Did silver have its blow off top yesterday? The short answer is it goes to what Danny and Dan are betting on right now. But, if you had said that back in late December, it appeared as though you had the same type of situation where you had this engulfing pattern and, silver made a new all-time high, closed lower than the prior day's low, and then traded sideways to slightly lower, and then it was off to the races. So I will say this, 88 maybe, but long-term I'm in Danny's camp. Like, I think silver is headed markedly higher than where we're trading now. I think the short-term completely overextended. We talked about it on Fast Money last night. We actually mentioned the fact that the mining stocks were underperforming. It was probably some sort of tell that silver was going to reverse, and that's taking place, but I don't think it's over by any stretch.
Well, Danny, what does it mean for every other risk asset? Let's say the dollar's careening lower, silver and gold never pull back, right? That sort of thing. We talked about, yields seem like bid-ish, you know what I mean? And we have a Fed that's not going to be cutting interest rates. If anything, the economy seems like it's humming along, by the way. I don't know if you saw the durable goods orders and stuff like that. So if the Fed is on hold for a while, like, I don't know, help me make some sense of this. Because honestly, I think it's about as clear as mud right now.
Well, look at EM, not to tout Vinny Porter once again,
tout him.
Look at the EM, look at those currencies. Look what's going on in LATAM, right? There's so much going on outside of the US and outside of the Mag 7 and stock picking and all this rotation going on, equal weight S&P outperforming, energy getting a bid. And, this obsession with some of these big names and stuff. In an economy that's growing 1% or 2%, there's opportunities, right? And stuff like that. The Fed, whether, what's going to happen with this long-term independence, I don't know. They're obviously not cutting rates tomorrow, but you have to believe that it's going to be more dovish. So that's also played in here, right? So there's so many moving parts here. I go back to one thing, and that's bottom-up fundamentals. And it has been a stock picker's market when you move away from the Mag 7 and all this, 50% of the S&P controlled by 10 companies, all this shit. There was a lot to do here. And so I think it's a lost art. And I think I didn't answer your question at all.
No,
I will take your money in the silver. And by the way, gold has outperformed since 2009. You can cherry pick your time frame if you want, because I'm all fired up here.
Hey, Danny, I'm going to get you more fired up. Do you notice the Dow's down about 380 points?
Seriously, who's the marketing gimmick? And you guys have anything to do with it at CNBC?
Wait, how much is the Dow down?
Hey, why
370 points?
I see the S&P. The S&P's up 35 handles.
They're just trying to get me going.
Why? So the S&P's up 35 handles and the Dow's down 380.
And the NASDAQ's up 1% on the day.
Why is there a price-weighted index in existence that is shown on national TV continuously?
What do you mean, you guys?
You guys. You are CNBC.
Guy,
you guys do
these. You guys.
You could have your Provasic. You change the samples on the TV to show the Dow Jones.
You find that, man.
Who cares about the Dow Jones? It is the dumbest indice in the history of mankind. It is a price-weighted. People.
Tommy Lee Jones.
I
don't care.
United Healthcare being down has a dramatic effect. Total points, dollars being down makes no sense. Don't ever look at the Dow Jones Industrial to tell you what the markets are doing. I've had it.
So
I love when Danny gets.
So moving away from that.
By the way, Danny, I think you need a haircut.
Well, that was the cold air that got up in there. Actually, there's birds that we're trying to keep warm when they're running in the thing.
But I just, to wrap up this conversation, because I want to get to Big Cat Tech. I'm looking at my fact set machine.
Big Cat Tech, I just said ignore it.
No, we're not going to.
Oh,
They're all
okay.
reporting earnings.
Oh.
But just to put a bow on that, okay, because I don't know if you really answered my question. If gold is going to 6,000, which David Rosenberg said to us on the pod.
Oh, when he says it's okay, when I claim it, you're like, what, are you going to be the next Tom Lee? That's what you called me when I said gold was going to go. Anyway, go ahead. But somehow Rosie gets a free pass.
So
I'm on fire today. Go ahead.
Silver's going to 200, then 300. Gold's going to 6,000, then 7,000. Okay. Where's the S&P go?
I don't know. Who cares?
I guess I care because on inflation.
Well, where's the dollar
over
going?
the last 40 years? The S&P has been a real outperformer. So let's say, but
okay, can I answer that?
Yeah,
if gold does actually go to 7,000, something has happened. We finally hit the breaking point, because then you're talking about another 40%. Then you're talking about basically a $50 trillion asset, and if you're talking about silver doubling also from there, you're talking a $12 trillion asset. That is a transformation in the global system. So at some point, you hit where the dollar and gold, and I think Carter knows 6. Well, I'm saying you're going to hit the point of equilibrium and the point of no return, and you're going to see the U.S. Treasury do everything they can to stop that, in my opinion. And there is a technical point, right, Guy, that where gold gets to where it crosses that kind of.
It's been telling. Listen, and I'll say this for the 100th time. We have been collectively bullish in gold. However, I thought the rally in gold was suggesting something was breaking under the surface, and that would affect the S&P 500. That's probably at least 2,000 S&P points in terms of where we are now and where we were when I started talking about this. So our gold view is right. My view about what it would mean for the broader market was wrong. So if you've avoided the S&P or stocks on the back of gold, it hasn't been the right move. With that said, I don't think it's the wrong premise, though. I do think gold is suggesting that there are things breaking below the surface. And the U.S. bond market, to me, is still not on particularly solid ground. My view. I still think rates go higher. And if you see an environment, and Danny can speak to this, where rates go higher in this country, the dollar continues to sort of go lower, that's not the biggest economy in the history of mankind. That's what developed nations do, Danny.
Well, that's what happened in April, though, right? And so that's the thing where,
right. And that was an event, but dollar lower, currencies lower are inflationary.
Yeah.
Period. End of story. So if you have something where the Fed independence feels threatened and or a more dovish outlook, and, the dollar starts to get hit on that, if long-term rates move higher in anticipation that policy will create and or dollar being down, which is going to be one and the same, caused by the same, will cause inflation, to Guy's point, then you have a situation where then the S&P is going down.
Yeah.
Can I do a public service announcement real quick? I need to sort of, there are a lot of people making the comments that, Guy, do you realize that the move in the Dow is entirely UNH? Yes, we
know that. That's why we're making fun of it.
That's why we were getting
right?
any exercise. Right? No, I mean, I just want to point out that we were just having
that's the whole
fun
point of it. That's why
exactly.
So dollar selling off precipitously, inflationary. One of the things I was just saying when we talk about the economy, and we're going to get a good read on this, what CapEx looks like from these hyperscalers, is that the energy demand is also really inflationary.
You read my script for the Danny Moses show for Friday.
That's scripts every Friday, people. Cameron Dawson of New Edge with Danny Moses. Can we get that promo up here?
No, please stop. Go ahead.
Danny has become a content machine.
No.
The host of the On the Tape podcast, the writer of the Substack, What Are We Doing with Porter?
Well, Vinny is a great writer.
He is an amazing writer. He really is. And then you guys are doing the Friday Night Dirty podcast, and then you're doing the Danny Moses.
Yeah, no, I don't know what
and now you're here with us.
It's all your fault.
It's amazing.
It's all your fault.
Thank you very much.
Yeah.
But when you talk about energy demand, like you talk about all this stuff, it's kind of hard to see for everyday Americans that inflation is not going to stay bid. Even if it starts to tick lower on the CPI or this and that or whatever, it seems like the cumulative nature of that is not particularly great. And it doesn't feel like we're seeing that or hearing that sort of commentary in the earnings right now. Some of the economic data, I just mentioned durable goods and some of this stuff seems pretty good. So it seems like we're in this weird spot where the macro feels really bad, but the economy here is okay. And the Fed is possibly doesn't know what the hell to do in front of a new Fed chair who might be dramatically pressured to lower interest rates.
I don't know how to unpack all of that,
no, just fucking
but energy.
I mean,
so energy, are you Are you saying so? Energy prices, you think, have found a nice floor here? Are you
No, yeah, floor. I mean, like, I don't think they go down from here.
right?
Like,
And that's inflation. Well, it's been a huge tailwind for the consumer. Energy prices have been down for so long. It's really been one of the things
but
that's
that's
not written.
flipped.
I understand that.
Okay.
And if you're talking about energy demand as it relates to AI, you also need to include silver. Back to silver again with that. Again, there is a physical demand for energy and nat gas. Nat gas now controls, I think it's 45 to 50% of all electricity generation in this country is powered by natural gas. And so that has all kind of shifted, right? Clean energy. What also has come on, Dan, is nuclear and uranium as a long-term solution. But to your point, you have a duration mismatch right now of the application of AI data centers to be able to power them. So to your point, what's the give here? What is it going to be, over time? So I'm not saying that's a reason to short AI chip stocks, but I do think we're going to reach this point where.
But Guy, there was an article this morning. I put it. It's going to be in our Market Matrix podcast this afternoon. If, for instance, okay, let's say we have this other, like, DeepSeek comes out with a new model, right? And we remember this. This was like this week last year, right, where they introduced this model, and
Alibaba went down like 18%, I think.
NVIDIA,
not Alibaba, NVIDIA. Excuse me.
Taiwan Semi was down like 13%. And so the idea that you would have, listen, I've been saying this for a while. The Chinese could torpedo, at least short term, our stock market
for a lot of reasons. Not just
but what I'm saying is, like, if they came out with a few different models, you know what I mean, then all of a sudden NVIDIA, it can't get out of its own way, right? So all of a sudden, then you have that thing getting hammered. And you say to yourself, well, what does that mean for the whole ecosystem, right? All of a sudden, if they want to, like, but that would also be very bad for power demand. So all of these nuclear trades, all this other stuff.
Well, that would make silver go down. That's one of the things, like one of the risks. Sorry.
Yeah, I'm just saying, I just want to throw, Guy, like, when you think, these companies can continue to raise CapEx, right? And they can continue to bid for power and this and whatever. But in one fell swoop, the Chinese could really do a number on a lot of these equities.
Yeah. Well, to the extent that we believe anything that comes out of there, and let's just, for sake of argument, say that we do. They have proven, the Chinese, that they can do it with far less energy usage. And, I don't know how that manifests or how that plays into sort of the global picture, but there's a proof of concept there that I think is somewhat of an existential risk. And, you mentioned the two companies that sort of stand out to me on the energy front, like a Vistra VST, which was a stock that nobody ever heard of for years, for good reason, because it didn't do a damn thing. It was basically a utility company that went sideways in terms of the stock. And things changed in sort of the spring of 2024 when people started to wake up to the whole AI trade, and then it went from this sleepy $33 stock to where it's currently trading. And the other one is this Bloom Energy that everybody talks about. The symbol there is BE. And again, a name that nobody ever heard of for years until, again, it woke up in 2024. So there is a chance that all of those stocks fall victim to this. I just don't, it's very difficult to time it. But I do think there is a risk out there to the entirety of this AI trade, for sure. And, all the things sort of associated with it.
Yeah. All right. And so it's not just the equity market. So the FT has an article this morning, and Danny, I'd love to get your take on this. Okay. Big test borrowing spree raises fear of AI risks in U.S. bond market. So, like, let's throw that on there. Here's some data I just want to throw out. Apollo is quoted in here. Morgan Stanley's quoted in here. What appears diversified across issuers and sectors increasingly represents a single macro trade on AI. This is Apollo saying. So they're not just talking about the data center guys, but it's utilities, all the issuance that we're seeing in and around that. Morgan Stanley estimates that hyperscalers and their adjacent companies will raise $400 billion from the U.S. high-grade market in 2026, a dramatic increase from $170 billion last year. And if you just look at this, scroll down a little bit, and you'll see this. So I just think that, AI and data center related sector now makes up 14.5% of the JP Morgan U.S. Liquid Index, a benchmark for nearly 10 trillion U.S. investment grade. I just think these numbers are getting really big. And I think the important part, the takeaway here is, it's not just in the stock market anymore. You're seeing a ballooning in the debt market.
No good trade goes unlevered, right? And so we've seen this before. Get a good trade. Saw something in 2006 and 7. Looks similar. Obviously, this is a little bit different, but it does rhyme. So you're right. It is pervasive. It's all kind of connected. You have a lot of private credit stuff out there, so you don't, quote, see it as much in the banking system. But no, you can't ignore it. Look at Oracle. Oracle's CDS alone and debt trading is the poster child for what could potentially happen, right? In terms of overborrowing, not realizing the gains that are going to be on it. Imagine a rate environment were to shift. This is why 10-year yields and U.S. Treasuries are so important. And one of the biggest misnomers out there to me is the investment grade credit spreads. And people have fallen complacent believing that credit spreads are tight. They are tight. You know why they're tight? Because you'd still rather own corporate bonds and get a return than deal with U.S. Treasuries, which on the long end might be unpredictable for all the policy stuff that we're doing. I think that's a false sense of security here. And again, I just mentioned stock picking a few minutes ago. I think there's bond picking that's going to go on. But to your point, you're right.
Bond picking.
There is all one big trade. And by the way, fixed income ETFs, please. So there is one big, trade going on, to your point, who's financing this. And so it's all connected.
Guy, Danny just mentioned Oracle. So this is, I'm looking at my FactSet machine, right? And I'm looking at my main page, and everything related to AI today is ripping. Okay, you just mentioned the outperformance of the NASDAQ versus the S&P, and obviously the Dow Jones that Danny likes to track here. So all the hyperscalers are up. Every semi name associated with this trade, the foundries, Global Foundries up 7%. Taiwan Semi is up.
G in your Gen AI.
Yes. All the storage, memory, all that sort of stuff ripping. Dude, AMAT is up 5% today. Semi equipment.
Are you going to say Oracle's down? Is that what?
Okay? CoreWeave is up 10% because we got to talk about this because Nvidia, invested yesterday $2 billion. They're basically paying CoreWeave $2 billion to buy the Rubin chips. But here's the one name that's down. Oracle's down 2%, but Oracle's CDS is 160. Okay, 160 over treasuries to ensure their debt. So to your point, so guys, speak to. There's this underlying thing. I think, if the government could take a stake in Oracle, I wouldn't be surprised by that. Okay. NVIDIA could take a stake. They already obviously have this open AI trade and they've invested in Oracle, all that sort of stuff. It's a dangerous short here, but Oracle, the debt and the equity are explaining exactly what we're talking about here. So, Guy, is this the canary in the AI?
I've thought that for a while. I mean, it is basically all the different things we talk about in one story: balance sheet, overexposure, leverage, all those things, and it's coming home to roost in terms of what Oracle's done. And just again, go back to the September. I think it was September 10th, and I went and I've done it. I've gone back and read the tweets and listened to the commentary. People thought this was this new sort of paradigm for Oracle, and this was going to sort of get it to the next, multi-trillion-dollar market cap company. And I think we were collectively scratching our heads. As a matter of fact, Dan, I think you were at the Robinhood event in Las Vegas when this came out, and it didn't make a lot of sense. And we thought there'd be a gap fill. Now, with that said, I will tell you that I never thought we'd be at levels we're trading at now, but yet here we are. So I do think Oracle could potentially be the poster child for all of this.
By the way, so Terry Duffy, CEO, chairman of CME Group, we were doing a podcast together that day. And Terry, of all people, who's the guy who started on the trading floor as a CME Group, traded every future that ever existed. And we were talking about it was aftermarket. Okay. And he was kind of like, and I'm just paraphrasing because he didn't drop an F-bomb. He's like, this is the dumbest fucking thing I've ever seen in my life. I mean, literally. And he called the top in that going back to.
He goes, wait a minute. He goes, it moved $250 billion in market cap today. You're like, yeah.
And he's like, sold. Basically, sold the way he was. Let's just talk really quickly.
Hold on real quick, because this goes back to, we have a question. But Danny Moses, I want to play this game with you. We don't rehearse these things. April 15th. Caesar's Palace, Las Vegas, 1985. Any recollection whatsoever? This is a loaded question. It's very difficult.
Is it a boxing match?
It is a boxing match.
Yeah. Is it Muhammad Ali?
No.
Larry
this
Holmes.
Might be the greatest couple rounds that I've ever.
Spinks?
No.
Hagler, Sugar Ray.
Hagler Hearns.
Well done.
But no, the fact that he knew it was a boxing match, that's tremendous.
Yeah.
I mentioned that because Marvin Hagler is actually with us here and he has a question. So Amanda, want to throw that up.
That's all that to get there.
Hagler,
straight from Brockton, Massachusetts.
We obviously did not rehearse that one.
Obviously. He is from, by the way, Thomas Hearns from Detroit, Michigan, the Motor City Hitman, if you recall.
Hearns.
Oh, nice.
That was ridiculous. I mean, that fight was out of control. Anyway, question is, what's better, XLE and XLU? Well, I'll tell you, given the conversation we just had, it's XLE. And XLE, if Amanda wants to throw up a chart real quick, we're at levels that we last saw, I want to say a decade or so, throw this thing, make it a longer term. And I think XLE is on the verge of a tremendous breakout to the upside. So there you go with the XLE. You can see what I'm talking about, those highs back in 2014. If Chevron participates here, I think we're off to the races, Danny Moses.
I agree. And we've been saying for a long time, if you didn't believe the economy was going to go into recession, you're okay. Then how do you not own energy here?
Yeah.
And all oil had to do was stop going down to give these stocks a bid. And ExxonMobil, has gone from 105 to 135. And its largest component, obviously, I believe, of the XLE. But you're right, Guy, if the others start to catch up and participate, get there. And again, Boston owns none of it. And so, no, this is important because when you get a rotation and a sector rotation going, you're going to buy the ExxonMobils and Chevrons because they're the most liquid. So if you want to express a trade, how can I put $50 million to work as a fund manager that's underweight energy? They go to these names, right? The question is now, they're re-underwriting energy as we speak. And they're looking and they're saying, hold on a second. In the last 5 years, these companies have transformed their balance sheets, right? They are much more well-capitalized. They're returning capital in terms of dividend and buyback. And I think that energy, which, the median energy weight in the S&P has been 6 or 7%. We're probably approaching 4 right now. Don't
6, 7.
You know what?
6 or 7%.
And as it relates,
what am I supposed to
as
do?
it relates to XLU, there's too many variables in place right now to want to own that. Meaning, if interest rates go up, XLU is going down, period, right? You got the grid situation going on. You have AI. You have regulatory overhang, potentially. You could see a situation where they're all told you can't raise prices. FERC says you can't raise prices. So I'm going to avoid utilities in general. They're all very different now as well because some are experiencing AI trade and some are just.
What are the best nat gas plays? Because, yesterday I read something somewhere that, the U.S. now, because of European reliance on nat gas from us, as they've diversified away from Russia, that we have a bunch of leverage on the trade front and that sort of thing. And I'm just curious, is that something, you think is going to go to a 5-year? Because we remember what happened to nat gas, right, when Russia invaded Ukraine, and then it just crashed. So give us the 411, A, why this might be interesting here, and B, how do you play it?
You asking me?
Well, man, I'm throwing it
well,
out.
The spot Henry Hub versus, when you go out and look at futures, I guess backwardation, Guy would know better than I would, but what you're seeing, you feel like it's an Amaranth situation for those that don't remember that blow up with trying to trade
2006?
Yeah, around that time. Yeah. Anyway, so I can't predict where natural gas is going to go. Obviously, people got caught off guard because it looked like the almanac was saying when we got through the first 2 weeks of January that wasn't as cold as expected, so the drawdown wasn't big. Then you get the storm is really cold. So as it relates to trading stocks, as a result of that, you've seen names like that have natural gas exposure, like Noble Energy, NE. Obviously move higher a lot, and so there are certain names. And by the way, most of these big oil names have some version, obviously, of kind of gas attached to them as well. So again, you can get some of that with the XLE in general, but I'm not going to try to predict where.
Amaranth lost 6. This is nat gas, and this is 20 years ago. Dan, you say 06? That's right. By the way, they lost $6 billion in like 2 weeks, which is a lot of money now. So, and it was a ridiculous amount of money then. And the guy named John Arnold, who, by the way, is going to be at the iConnections conference. I think Melissa Lee is going to interview him, which I'm looking forward to. He sort of was the guy that was able to take the other side of the entire thing, and he built a career up. But, in my world, and Danny knows this, natural gas is correctly called the widowmaker, and it's about to do the same thing to people again.
May have done it already. We just haven't seen who's
true
on here. So,
AD, can you pull up that earnings calendar? Let's just hit a few of these really quickly before we get out of here. One of the things that I noticed, well, it's not hard to notice, and I'm not saying so look at on Wednesday, you have Microsoft, you have Meta. Let's just pull those two up for a second, and then Apple. Look at the way that these stocks have rallied the week into their earnings, which I got to tell you, I mean, obviously they sold off dramatically. So Microsoft in the last week has gotten back what it gave up, in the last, 2 weeks prior or something like that. Pull up Meta. We know that Jeffries had that upgrade, 5 reasons to buy in front of earnings. You saw the move there. And then let's look at Apple. I think it's interesting that that's right at its 200-day. Microsoft was not too different. And then Apple, didn't get to its 200-day. Not that that's, important. I think it was down 13, 14% from those recent highs. But, Guy, is that a tough setup into earnings, or does it really matter? Are you going to see a continuation of this momentum? Maybe investors are finally bad quarter. Not even bad. None of these companies are going to have bad quarters. You know what I mean? But just not up to the whisper.
You a fan of Dennis Hopper by any chance?
Of course.
Of course. In
How about-
1986.
how about-
Well, you
wait,
running
wait.
the picket fence? Is that what
There
you're doing?
you go. There.
Is that what we're
You and
doing?
I are so always
I
simpatico.
Danny
thought you were gonna
Moses is like
say-
you're in my
how about
head.
this? How about one of those Chesterfields?
True Romance.
Bang.
I'm on fire. Let's go, guy. I forgot what the question
No,
was.
but
for
you don't want to.
Wait,
You don't
so we
want to
play
get
6
caught.
Degrees of Kevin Bacon
watching
with
the
Dennis
paint
Hopper?
dry.
That's a game we were playing recently there. Go ahead. Sorry.
You don't want to get caught watching the paint dry. I mean, that was, of course, shooter Dennis Hopper, Norman Dale, Gene Hackman, had gotten kicked out of the game by choice. And I
By the
think
way,
to answer the go ahead.
do you hear? So all those actors on that movie were like, they thought Gene Hackman was such a dick. He was so
Really?
pissed. He was just
I
like,
guess he was in character.
what do we do? Yeah. He's
Oh,
like,
good.
what are we doing making a movie about 50s back? He was just like not
Wow.
into it. And
Well,
then
he pulled it off.
You know, Wade Schneck. Does that name ring a bell?
Nope.
Danny?
I called him the Schnecker when he and I
You
went
don't,
to
you don't
college
know the
together.
answer. That he played Ollie. Now he played
Okay.
the little guy
Ollie, he
that
who shot
apparently
the
had
ball
no
under the-
game, but you
Rick
know,
Perry style. Yeah.
he could play actually, and he had to like dribble the ball off his foot and a bunch of times, but he had a game, and it
Since we've
upset him
gone off
that he
the
had to
rails.
be the.
Since we've gone off the rails, I just want to
No,
say
I don't mean to go off the rails. My
no,
point is,
I want to say something. I would love
Go.
to see you next Halloween in the Hoosier uniform.
I can do that.
That gold and red. That you would look tremendous in it. Anyway, sorry.
No, I would have been the kid Witt, if you remember. I think that was
I remember
Brad
Witt.
Boyle that
Yeah.
portrayed Witt. He was sort of the muscle guy. So I'm the guy that likes just to blow people
That was
up.
Hopper's son, I believe. Witt.
I remember I played. This is a home game against Pleasantville. I think it was my junior year.
Yeah. And
we played man to man because that's what we did. And I saw a kid was about to set a pick on me, and it was early in the game, so I wanted to make a statement. And I knew I was going to get whistled for a foul, but I blew this fucking kid up. He almost wound up in their bench after. And my point with doing it was, if you're going to get a foul, make it a good one. And I don't think they set another pick the entire game. And I remember hearing the air leave his lungs.
Yeah, but now there's flagrant.
And I
fouls.
played like I didn't see him. Like I looked at the official like I didn't see him, but I saw him the whole time.
Now there's
earnings season. Microsoft.
Yeah.
Overbought.
Back to Hoosiers. I think people don't want to be caught watching the paint dry. They want to get ahead of earnings. That's why you're seeing these rallies. Back to you.
So they sell on the news. Is it a sell on the news setup? Is that
no,
what you're
I
saying?
think you think that some of these will get a continuation, guy. Is that correct?
Microsoft is the one to me that has the potential to have a huge rally on the back of earnings. And that gap to the downside scares me, but that's the one that you could be talking about. Oh my God, nobody saw this $30 move coming in Microsoft, or a 7% move to the upside. So yes.
Thursday, this is the one I'm most focused on. I feel like, up or down 5%, 3, 4, 5% for Microsoft, Meta, Apple. No, I know, but I'm just saying, like if it was down 4%, well, it gives back half the gains over the last week. If it's up 4%, it feels like, it's really oversold. So like to me, unless there's some bomb that's dropped, SanDisk to me, guy, SanDisk comes out what?
SNDK.
Okay, they report Thursday after the close, and let's just pull up this thing. So we know what memory price is. We know what's going on. We know, like, as far as where they sit with NAND flash and why it's important, in these servers relative to the GPUs and all that sort of stuff. And for some reason, investors just got wind of this 4 months ago. I mean, they just got wind that these servers that have these GPUs on them, they need memory. And then they need storage that sits behind that, or these servers don't work particularly well. So this thing is up 100% this year.
Memories like fingerprints, they are slowly fading.
Yeah.
That memories?
Yeah.
All right.
Yeah.
What is that?
That's elderly woman.
Yeah.
Behind a counter in a small town. Actually, much like Pleasantville, guy. It could have been a woman in Pleasantville behind a counter, basically about being left behind. This is really what's going on.
Now I think it's caught up.
So SanDisk here, the implied move is 10%. I don't know about you guys. That seems light. Okay. Like if you were to buy the at the money straddle, I think you're going to make money this week. Guy, if this were to break, okay, and we know that pricing is this, and we know they're sold out for this. It's the same thing with with high bandwidth memory, with Micron, all that sort of thing. But what if there's double ordering? what if there are signs of basically maybe pricing isn't as good as, some analysts are expecting or some investors? I mean, this is the last thing to break, in my opinion. And if this trade breaks, because money's been coming out of the hyperscalers now for 3 months, coming out of NVIDIA, and it found these sorts of names. You see what's going on in semi equipment too. I mean, this is the one that I would get really nervous about.
Yeah, I agree with that. And to the question about double ordering, I think there's probably no question about it that, you're going to see double, triple ordering without question. I don't know. Look, the numbers are going to be fine. The valuation is never necessarily a thing here, but it's really the commentary on the back end and what their guidance is going to be. Now, I think the good news is, and we asked this question on Fast Money a couple of weeks ago, what barriers of entry are there to get into the space? And I think in terms of DRAM, somebody said it was like a 3 to 5 year thing. So they clearly have a head start, but this is not going to go on in perpetuity. And the highly commoditized cyclical nature of these industries, in my opinion, is not going away.
We have an accounting term for that, which is LIFO, right? Last in,
first out, bitch.
And I think that people get excited. They feel like they can get a piece of the secular AI trade on a group that hasn't run yet, and then they just run it. I don't know what's going to happen on the quarter. What's the market cap on SanDisk?
It's like
right
60
now?
billion. I mean, this thing was spun out of Western Digital. Talk about unlocking shareholder value, as they talk about.
It's a $70 billion company right here.
Yeah. So I haven't done enough work on it, but it does smell like LIFO to me. Anyway.
Well,
it smells like Teen Spirit. You guys like that group, right? Isn't that the guy that passed away?
Yes.
By the way, you mentioned the market catching wind. There's a great scene, of course, in Trading Places where somebody's offered beef jerky and he declines because it gives him the winds something terrible.
There's one of my favorite scenes in that movie is when Dan Aykroyd is dressed as the Santa and he takes out the salmon. And it comes through his like fake beard and he's just eating it.
Yeah.
That is
rough.
That's your favorite
versus nurture.
Oh, it's one. I just think there's so many little.
Right.
I thought you were going to say with the breaking wind was when Eddie Murphy is in the tub. Remember, like
yes, remember that as well. Bubbles.
Yeah.
Right.
So can I just say one last thing on the So Danny said this to me, Danny said this to me, guy, that before we started out, we're talking about the private credit trade. You were talking about some of these BDOs, right? You're talking BDCs, sorry.
We discussed this on Fast Money last night, by the way, and there was an article on CNBC.com on Friday. Back to you.
It was old news.
No, that's not what I'm saying.
That's what he's saying. When it hits CNBC.com, that's what he's saying.
No, it wasn't.
But you said, I wish I was, I don't know if you said I wish. I want to pay more attention to what's going on here.
Yeah, I mean, I do pay attention, but I need to be right. So when you have a markdown of a certain portfolio and all of a sudden, the publicly traded vehicles down 19% trades down because they're marking to market or more instead of marking to model more. What I meant by that is you opened the show with this today. There's so much going on that you need to pay attention to. And sometimes you can lose the forest for the trees. That's an important thing. And to the point you made about the growth in debt as it relates to AI, all this stuff's kind of connected. And so we had a credit scare late last year that people have said, oh, that was one-off. You had an auto parts company, right? Mm-hmm. You had an auto. Those are one-offs. And okay, there was fraud, obviously, at First Brands, it appears, and stuff. But there's going to be other things that happen. And
Jamie Dimon said that. I mean, there were a bunch of bankruptcies in the fall. All these direct lenders, these private equity companies, and Danny, you're spot on. Back to you.
Is he the one who said there's never one cockroach? Is that what he's saying?
Well, yes, he did say that.
That's from the Tempest in a Teapot guy.
By the way, Forest for the Trees, the Luke Groman.
That guy is a genius. He's really he's quite.
He scares me. He scares me
in a good way.
Yeah, but he got really bullish like 2 years ago, didn't he?
He's been right.
I know he is right. I'm just saying. Hey, guy, GM up 9%.
Comes out General Motors
after their earnings. Look at this thing. What's the AI play there?
I will tell you. I'm not pretending to be some auto genius, but I've said for a while that if you want to be in the space, GM is a place to be. And now we're talking about this iteration of General Motors. Your father's generation is gone, and it's the new one. It's a new all-time high in GM. It's an $80 billion company, and this is far outpacing what Ford is doing. So in the game of would you rather, which we often play, despite the fact that I think Ford is trading like $14, it's meandering. GM is still the place to be, Dan Nathan.
And he's ready to go. He's like,
no,
well,
I have a
no,
thing. I have a
but
thing go off.
really quickly.
Yeah.
So GM had this really started to catch some steam once they pulled back from EVs.
Yeah.
And it's interesting. I was reading Tesla reports this week. I was reading.
Oh, yeah, they do.
I was reading a couple previews. None of them talk about deliveries anymore. Like zero. Nobody cares about their EV business, which is pretty fascinating. So, I hope this robo-taxi thing works.
Yeah.
I hope
Have at it, people.
Works. Have a ball. And what did I say back in September? I said, Guy, I'm no longer talking about this stock.
Yeah.
It wouldn't even say
we have it.
Yeah.
No, the stock was 366. I said it's about
He's not even saying the
I
name.
said it's about ready to party. Remember that? I said it's about ready to party, and I haven't talked about it since.
By the way, we have a couple things we want to do before we get out of here. First of all, we want to get out of here. Second of all, Danny, we have a Super Bowl. Sam Darnold, who was drafted by the Jets. Clearly, the Jets knew what they were doing, or they didn't give him enough time. Against, obviously, the youngest quarterback since Dan Marino to appear in a Super Bowl. That, of course, is Drake May, who I happen to love, by the way. Kid's a stud. Thoughts on this game quickly?
4.5. It's the line. I can't go long Sam Darnold. If it was any other quarterback, I would take Seattle because I don't think the Patriots and Drake May are ready yet. High scoring game, not a defensive game. Most Super Bowls are. So
what's the over under?
It's like, I don't know, 40-something and a half. I'm going to go with. But
that's the over. I don't know. 90% of NFL games is
whatever.
Like,
it's always on the half. Yeah. But I'm going to take New England because I have to bet the
45.
Game. So 45. 44 and a half,
so
45.
Guy, we had some other let's do this really quickly and then we got to do something with Danny. Jacob, do you have the promo for He Said She Said? We're really excited.
I love this. Just watch this.
Watch this. See if
you guys dump me for these women.
Dude, stop it.
I know
this
you
is a
are.
segment, and
I'm
you
kidding.
have your own podcast now. You have like 8
better hair than you.
Jacob just said I don't have it. What do you mean?
All right, we don't have it.
He Said She Said. I've been listening.
Have you?
It's good. Yeah,
it's really good. Yeah. Those guys are great. They have like energy, like you've.
And they have good experience in Wall Street. I mean, they've seen a lot.
No, hold on. She said G Swizzle here. That's Dan Nathan, but of course you'll also see Kristen Kelly with the plant in her background. Of course, that's Jen Starbuck.
But this could actually mean that Chairman Powell sticks around and, stays out the term of his whole governorship, which would mean one less appointment that Trump gets to make.
What a gangster move, working longer out of spite.
Yeah, seriously.
And I'll play the he said portion of this game, and I'll say, a lot of market participants, for some reason, feel the Federal Reserve controls interest rates across the entire curve. And the reality is that's not what's happening.
And so if we all of a sudden make it impossible for banks to cover the cost of originating these things and to absorb the inevitable losses that happen from, within these giant pools of credit, then all of a sudden, it's not going to be that all of a sudden everyone can go get the same amount of credit at lower rates. What it's going to mean is that these banks can no longer offer credit, and the amount of credit that can be offered to the American consumer shrinks. That means less spending. That means companies' earnings going down, and it means a slowing economy. It becomes this feedback loop where actually everything becomes more expensive for the consumer because they cannot get access to this credit because banks are rational actors.
The advertising business and their ability to raise prices, which they will have, and I know they're going to make the case, to regulators that they're not going to do that. I don't know. It's shaping up at some point. It's going to be a really interesting buy, in my opinion.
There's just so much uncertainty on the horizon. To your point, maybe they're being unfairly punished for that. I'm with you. I would not bet against them.
What do you think, Danny?
Between the ferns. I saw the fern, the plant. I thought it was great. No, it's really good.
They make us smarter. It's been a fun segment to do.
She looks double jointed, by the way. Jen was able to bend her finger back during that thing. I saw that.
They are smart broads, as Guy would say, huh?
Yeah. By the way, Fern, do you know who the who was what show movie Fern?
The thing with
Vern.
All
right, so Danny,
by the way,
really appreciate you being here. You guys, Wednesdays is On the Tape podcast. You can subscribe to it in the podcast store on YouTube. Go to his Substack.
Can we show that picture, please? Just the picture, the still, with the smoke.
All right, I got to get out of here.
Danny's got to get out of here.
Yeah. Hold on. No, he doesn't. Look at that. That is.
I should have lost.
You know what? I will tell you this. Yeah. When I see that steam coming, I walk around it. Do you know how disgusting that stuff is?
Yeah. That's what you're worried
Look at
about
you.
in the city?
How do you take your coffee?
I wasn't
Danny?
even. I don't know if there was coffee even in there. All right, can we get out of here now, please?
Thanks for being here.
Yeah.
Really appreciate it. We'll see you tomorrow, 11 a.m.
See ya.
Bye-bye.
Bye.